part of the reason is that there is this overhang of the thought that we are going to do an equity financing of some size to finance this project, and it's my job to try and mitigate that.
Right. So you're saying you've no intention of, you can't rule it out, but you've no intention of doing an equity raising?
I'm doing everything possible, and we're looking at all the traditional forms of financing this project, and we're looking at unconventional forms as well.
Okay.
One of the things, when we built La Arena back in 2010, we took down a gold loan with Red Kite back in those days. That was one of the first gold loans ever done to a company like us by a company like Red Kite. It actually set Red Kite up and it set us up. Now, we were at the forefront, we were innovators. We are looking at, I can't say exactly the same recipe, but we are looking at innovative ways of using what investors are looking for in this market to deploy capital, and we are hoping that we can come up with something innovative to fund this project.
I mean, we've seen some quite funky structures from companies, in South America, like Gran Colombia, where they issued bonds and paid it down with gold and cash. I mean, are you talking that sort of level of interesting?
We might. I mean, and you just saw that Gran Colombia is a large shareholder of a company called Caldas, and Caldas have just done a vanilla, well, it's relatively vanilla, wheat and precious metals stream, and they're going to do an equity issuance, and they're doing one right now, I think, for $45 million. But that's vanilla, right? I'm talking about not vanilla, and if we can pull something off as what we're thinking, we're going to be right at the forefront, and I think we're going to set a tone for other people to follow us.
Yeah, I mean, essentially, like I always say, like money's money. It's just the terms and the cost of that money that is the interesting bit. Cool.
There are so many people out there that are trying to put money into fixed income and they're getting no returns, right? So that's the crowd to attract, is those people that can't get sufficient returns out there, and provide them with an incentive to get involved in a gold-backed return is what we're talking about.
Yeah, I think that would be very, very interesting. You'll keep us up to date as that develops,
Yep.
I'm sure. Let me get into the asset first, because again, I want to understand this cookie cutter approach. Again, I want to understand what I'm buying into here. Okay, the team's track record I get, but with regards to the asset, this is the largest. The largest of anything is always quite interesting, but usually. But the largest gold heap leach oxide project in the Americas sounds quite interesting. Why do you make that claim?
Well, from research, if we look at a neighbour that just put out a press release today, Kinross, talking about Lobo Marte. Lobo Marte is over 6 million ounces, but it's not a pure gold oxide heap leach project because it comes with copper, and therefore there's a SART process involved. And you can see that their capex that they've predicted at the pre-feasibility level, which is likely to be many times, a lot more than what it is $1 billion. So when you look at, they report very low AISC, but their IRR is in the low 20s. So you go, well, what's going on there? And the dynamic there is it's just going to be huge capex to build. Now, we have a project that if we were to build it out day one, yes, we would have a big capex. But we've decided to focus on a small startup project, which will cost us about $120 million. Exactly the same cookie cutter recipe as what we used at La Arena and Shell Window. Start small and build up from there. That's what we're good at. And also accelerating ourselves to that point. I mean, we're in the best bull market for gold that I've seen in my 40 years, and who knows how long it's going to go for. And it's all about rushing as quickly as you can to get to the point where you're producing gold bars, and that's what we're about.
Okay, so I appreciate that. You did, though, inherit a different kind of PFS, a much bigger opportunity, I think. And
there is a bigger opportunity there. Our throughput rate is going to be 20,000 tonnes a day for the starter project. We believe and the biggest constraint, two constraints are the gold price and water, right? Now, we're going to truck the water from Copiapó to the project for the starter project, But for the larger project, we're going to have to look at a larger source of water. And we're working on that right now. Put that aside, if we had that larger source of water, we can get the production rate up to about 100,000 tonnes a day from 20,000. So that's 5 times more. And we'd be on a run rate of about 250 to 300,000 ounces of gold production at that run rate. Now, once we settle on that water option, our intention is to do a PEA so we can show that, right? We can say, this is where we're going. However, we're going to start here. Now, all the expansions that we did at La Reina and Shahuindo were funded from cash flow. And that's exactly what we intend to do here. Get started, $120 million initial CapEx, some sustaining CapEx along the way, but cash flow will hopefully set us up for the larger project as we go ahead. That's the model. That's what we intend to try and achieve. And we've done it twice before, so there's no reason why we can't.
It's quite interesting, actually, in this current gold bull market, people are getting quite excited. I think there's a lot of companies perhaps don't necessarily deserve to be where they are getting a lot of voice, they're getting a lot of notice, their share price is going through the roof, market cap increasing. They don't look to me like they're ever going to get into production, but you were talking to me just before we started, and I said, congratulations on the share price, and you're like, no, not happy. Why?
Well, I mean, I don't like to compare us to other developer peers because it's like comparing apples with oranges because, but we're in the lower quartile of valuations of those developers, the lower quartile. And so I'm not happy. And that's my responsibility, and I've got to change that. We should be in this market with what we've got and going into construction next year, I would say at least a $300 to $350 million company. We're a $140 million company. So we're lagging this bull run in this market, but we will catch up.